All right, so we're having a webinar this afternoon and we're looking at how we can make use of uh, price characteristics and trend lines to trade the market. So let's get started. All right, now definitely in trading, the constant thing we talk about all the time is price. What we trade is the current market price of financial assets. If you're trading currencies, we're not having any physical dollar or pound or euro anywhere. What we trade is the fluctuation of the exchange rate. That means we're trading the price. As the price goes up, we look at opportunity to buy. And when the price comes down, we look at opportunity to sell. The same thing if you're trading cryptocurrency. We don't have any crypto assets anywhere. We trade the current market price of the cryptocurrency assets we're trading. Same thing, gold. We don't have any storehouse where we keep gold or crude oil. All we trade in all these assets is the current market price of all these assets in the global financial market. So that makes price a key thing to look forward to when trading. What we trade is what is called price action. That is the activity of price, as moved by the fundamentals or technicals in the market. So we need to really understand what price is and the characteristics of price, because that will help us in predicting the next move of price. And that's what we aim to teach in this particular webinar this afternoon. So we're looking at the characteristics of price movement in the market. And the first thing we want to note is trend. Trend. We say that trend is a tendency for price to move in a particular direction over a period. Trend talks about the direction, market direction, whether the price is going up or down or going sideways. Now, trend can be long-term or short-term. Long-term talks about price in a particular trend where price can go in that direction for a long period of time, maybe for months or years. That is a long-term trend. Or it can be short-term. Short-term talks about trend moving in a particular direction for a few minutes, a few hours, a few days, or sometimes a few weeks. That can still be tagged as short-term. Now, we see that success with trading is largely tied to the trader's ability to identify trends and position themselves for profitable entry and exit points. So basically, as traders, our core responsibility is to identify where the trend is going, whether the market is going bullish so that we can buy or bearish so that we can sell. Now, we don't decide on the direction of the market to trade by ourselves. We only identify where the market is going and we follow the market to wherever, price is taking the market. Now, there are three types of trend. There's an upward trend, the downward trend, and the sideways. And you can see the picture right on the side of the screen. You can see the uptrend, which is called the bull sentiment, the downtrend, which is called the bear sentiment, and the range. In an uptrend, price is trending higher, that is climbing up higher for an opportunity to buy. In a downtrend, price is dropping out lower for an opportunity to sell. And in a range or sideways, there is no definite direction, for price in a ranging market. So the first characteristic of price is trend. Now, we want to break down that trend for more clarity. We said there are three types of trends: uptrend, downtrend, and sideways. Now, in an uptrend is when the general price direction of an instrument is upwards, price going upward, moving higher. So in an uptrend, price makes a series of higher highs and higher lows. Now, price doesn't just go on a straight line. Price doesn't just jump up maybe from a scale of 1 to 100. No, it moves in a zigzag manner. It makes a series of what is called a higher high, then a higher low, a higher high again. Now, the next higher high, price is higher than the previous high. Then it makes a higher low, another higher high, and on like that. That is how price moves, in the market, in an uptrend. In a downtrend, however, we say that this is when the general price direction of a financial asset is downward. In a downtrend, price makes a series of lower high and lower low, lower high, lower low, lower high, lower low, lower high, lower low, and so on. So in a downtrend, the lower lows, when price makes a new low, it means price is dropping lower. And thirdly, we have the sideways. The sideways. Now, this can be called sideways market, range, or consolidation. Any of these three, they still mean the same thing. I would say this is when the general price direction of an instrument is not clear. It's not clear whether it's going up or whether it's coming down. Here, price is bound between a set of parallel lines, which can be called a resistance or support. Now, usually, it's advisable when price enters a range zone for you to avoid the market because there's no clarity around price at this particular point. So these are the three types of trend: the uptrend, the downtrend, and the sideways. Next is we want to look at the next characteristics of price, which is called retracement. The next characteristic of price is called retracement. Now, we say that retracement is a temporary price movement against the established trend. Now, we said in trend, we're looking at direction, where price goes in a particular direction over a period of time. And we say that retracement is temporary price movement against the established trend. We can also say that it's any temporary reversal in price within a major price trend. So let's explain that. In the diagram on the screen here, the overall direction is bearish. But within that overall bearish direction, in a downward trend, we say price makes a series of lower high and lower low. Now, since the overall direction is bearish, when price makes a lower low, it's in line with the overall direction. But then a lower high looks like it's trying to buy. Now, that is a temporary price movement against the overall trend. Afterwards, you can see that price continues selling. So this time, when we see a buying trend within an overall bearish direction, is called a retracement. Now, this one gets a lot of traders confused. You may see yourself place a buy trade, everything is going fine. All of a sudden, it reverses into a sell. And just as you close the trade in a sell, the price reverses to a buy again. If it has happened to you before, well, it's one of those things in trading. It's called retracement. Now, understanding this concept will save you from a lot of headache when trading. See, the first thing you need to note when trading is to identify the direction. So if you identify the direction as an uptrend, it means that any bearish trade within that uptrend is not your trade. Let me go back to a previous slide to explain what I just said. All right, let's use the bullish trend as an example. Here, the overall trend is uptrend. Now, here is, you can see the support line, overall trend is bullish. We say this is higher high, higher low, higher high, higher low, and so on. Now, when price moves to the higher high, this move is in line with the overall trend. So it's very okay. But then when it begins to sell within an overall uptrend, that is called retracement. So the uptrend here is the trend, is in line with the overall trend. Here is a retracement. So you'll see that if you decide to sell within an overall uptrend, the next thing is that the price goes against you and your trade becomes a losing trade. That's what I was trying to explain earlier. So never trade against the trend. Now we have a saying in technical analysis. We say that the trend is your friend. Always look at an opportunity to trade in the direction of the overall trend. Never trade against the trend. The trend is your friend until it bends. So please take note of that while trading. Now, the next concept after retracement, here we have the trend. The overall trend is uptrend. Retracement is temporary movement against the trend. The next one is called continuation. Continuation happens when price goes in the original direction after a retracement. So let's go to the slide. So here is continuation. We say that a continuation pattern shows a tendency for the trend to move in the same direction after a retracement. It presents favorable entry levels to enter the trade in the direction of the prevailing trend. So in this example, again, the overall trend is bearish. Overall trend is bearish. Price entered into a consolidation as a retracement. Then price broke out and continued selling. So after every retracement, price will continue in its original trend. Price starts with an overall trend. It goes into a retracement, which is temporary movement against the trend. Then it continues in the direction of the overall trend after the retracement. And the last characteristic of price is called reversal. Reversal. Now we say that reversal is a major change in the price direction of any instrument, any trading instrument. A reversal can occur to the upside or downside. Following an uptrend, a reversal could be to the downside, and following a downtrend, a reversal will be to the upside. This is what we're saying here. The overall trend here is bullish, then price got to a point, it's reversed. So reversal is an overall change in direction, and this clearly explains that. Here we have the overall trend being bullish. Here we have retracement, trend, retracement, continuation, retracement, continuation. But then at this point, no more continuation. The next thing here we see is a reversal. Now, it's always not safe to get caught up in a reversal because when price reverses, it means it's changing direction completely. If you are in a buy trade around this zone where the reversal takes place, then you may end up in a loss. So you need to trade with caution around reversal zones. All right, so that's it on price and the characteristics of price. And I said we'll look a little bit at trend lines. So we'll end with that. All right. Now, what is a trend line? Now, we talked about trend. Trend is the overall direction. You see, our job as traders, as technical traders, is primarily to identify trend. That's the first thing we do. How do we know the price is about to reverse? Well, reversal points, we'll talk about that in another class. That's not this. At least here, what we're looking at is direction. But usually, when price is about to reverse, it reverses around resistance and support levels. But then we'll look at that in a separate topic from this particular one. Just take note of trend and characteristics today and also trend lines. Now, we said that trend is direction. Price can be in an uptrend and price can also move in a downtrend. Now, how do we identify trend either in the uptrend zone or the downtrend zone? We can use a tool on our trading platform called the trend line tool. You're welcome, AC. You can use the tool called the trend line tool. Now, how do we draw a trend line? We draw a trend line by connecting in an uptrend. We'll connect a series of higher lows with the trend line tool. We connect them together as many as possible, and that gives us an upward moving trend line, which means that price is pointing towards the bullish direction. Now, you need a minimum of two higher lows to form a trend line. Now, subsequently, other times that price touches that trend line, a market reaction, a price reaction is expected at such an instance, which can point us that price is going further in the bullish direction. Right, what you're seeing on the screen now, I've taken these two higher lows as my reference point for the trend line. Every other time price touches the trend line, you can see price bounces in the bullish direction. And that enforces what I said earlier, that you should only trade in the direction of the trend. Because if you try to look for a sell trade under this kind of scenario, price may go in your direction a little. Okay, let's look at this place here. If you decide to take a sell down here, suddenly price will reverse to the upside. Again, a little down and higher. You can see that price is going more in the bullish direction than the bearish direction. So with the trend line too, you can learn to trade in the direction of the trend. And I want you to stick with that when trading. See, trading is not about the number of signals you pick. It's about the quality. It is quality over quantity. In an uptrend, only look for bullish trades. In a downtrend, only look for bearish trade. All right, that's going to be the end of this very short webinar. We're going to have, further classes on Wednesday, and every Monday and Wednesday going forward, we'll be having this kind of webinar where we'll put you through how to trade the market. Okay, so if you have any question, you can go ahead and post it. I will respond to you as we begin to round up. All right, Michael Boboy is asking, what time frame is good for uptrend? That's a very good question. Now, the higher the time frame, the clearer your trend, your signal becomes in forex trading. So higher time frames like daily, weekly, monthly can give you a clearer direction of the market compared to lower time frames. Yeah, 1 hour, 4 hours is still relatively okay, but lower time frames may not give you accurate, clarity as regards direction. If you want to get direction, use the higher time frames, daily, weekly, or maybe 4 hour. 4 hour can still work also. The higher the time frame, the better. It gives more clarity as regards the direction. So that's my response to you, Michael Boboye. Any other question? So while we're waiting for the questions, don't forget tomorrow we're having CPI, Consumer Price Index. Now, if you joined us on Friday to trade NFP and you made money, that's a good one. We're making money again tomorrow live. See, this is real money, no audio money. People made money on Friday. People made money, and we saw a lot of testimonials of those who made money. Now, I want to encourage you, if your account is not funded, go ahead, reach out to your account manager and fund your account, because we are making money tomorrow. Time is 2 p.m. We're going live by 2 p.m. The data will be released by 2:30. Now we're coming in earlier tomorrow so that people can, we're opening the platform by 2 p.m. so that people can have enough time to settle down. Then we'll do analysis. But then we're going to drop the signal, around 2:20 p.m. Now, there is no African time when it comes to this. If you come in late, well, we can't help you. But come in early, join us early so that you have sufficient time to take the signal. Then we'll watch the market do its thing and sweep us into profit. All right. So Mr. Dowda is asking a question. The reverse, I'm not getting it. Do you mean reversal or reverse in 4 hour can be like trend change in 15 minutes? How can we do it? Okay, I'm sorry. I don't think I understand what you are trying to say. Probably you can rephrase it so that I can get uh, your inquiry better. But if I would try to reason it, I would say you may use the 4 hour to identify the trend, and you can use a lower time frame like 15 minutes to make your entry, depending on your strategy. Now, take note, I've not taught strategy here today. I'm only showing you how to use the characteristic of price and trend lines, and how you can use that in analyzing the market, preferably. So we've not really done entry strategy in the real sense of it. This is just making you understand price characteristics and how we can use the trend line too. So you can look for your trend on an higher time frame, then look for a lower time frame for entry, and that's basically what top-down analysis or multiple time frame analysis, that is basically what it's all about. So I hope that answered the question, Mr. Dowda. All right, we have just a couple of minutes to go. If anybody else have question, just go ahead and post it. I'm still very much available. Now, if you're on the platform, you don't have any trading account with PU Prime, you can do one or two things. One, you can head over straight to our website, www.puprime.com, and open a live trading account. Or better still, if somebody has reached out to you from PU Prime in the past, then go back to that chat, go back to that phone conversation, get to chat or call that person, and make sure if the person has sent you a registration link, click on that link and register with PU Prime. Okay, looks like we don't have further question this afternoon. Then that means we're coming to the end of this webinar. Do join us tomorrow, 2 p.m. NFP, pardon me, CPI is Consumer Price Index, live trading by 2 p.m. tomorrow. And make sure you don't miss any one of our webinars. Now, if you are living in Abuja and its environ, or you're living in Lagos and its environ, we're having our physical training session tomorrow, Tuesday. Now, our physical training session runs twice in a week, Tuesdays and Thursdays. Lagos office will start by 11, Abuja office starts by 10:30. So if you live around Abuja and its environment, then you can go straight to our office tomorrow at Work and Connect Building 50, a Ebitu Okiwe Street, Jabi, Abuja by 10:30 a.m. tomorrow for physical training session. And if you live around Lagos and its environment, then we invite you to the Lagos office at Agos Executive Lounge 54B, Adeni Jones Avenue, Ikeja, Lagos. So make sure you join us at any of these two offices tomorrow for physical training session. And this webinar comes up Mondays and Wednesdays by 4 p.m. So expect another one this Wednesday by 4 p.m. All right, so that's the end of this session. Take care, trade safe, and enjoy the rest of the day. Bye bye.